Hey, Dan Passarelli here. Well, Q2 ended up being sort of a struggly quarter, but it ended up strong. Ended closing up, oh boy, over 10%. Uh, and let's see here. Today, well, S&P 500 closed mostly flat. A green candle, meaning up on the day, tried to give up a little bit more gains, but the market just wouldn't let it. And we still have pretty high volume like we've seen since about the end of February. Now, what does all this mean? Well, look, there's a couple things going on here, right? We've got this big, beautiful bill. We've got the tariff deals. But another thing is also at play that we need to pay attention to, because we've been seeing maybe a little bit friendlier or dovish tone coming out of the Fed when it comes to interest rates. The CME Group's Fed Funds contract is pricing in a 21.2% chance of a 25 basis point cut at the Fed's next meeting, which is July 30th. And if they don't do it then, that same contract is pricing in a 74% chance of that cut being done by the meeting after, which is September 17th. And it's starting to look likely that we're going to get that cut. Now, what is going to make the difference? Well, we're going to get some pretty good visibility of that this Thursday when we have the unemployment figure. I talked a little bit about that. Did I talk about that yesterday? I might have talked about that yesterday. That's the monthly unemployment figure, non-farm payrolls. And that's going to give us some visibility. And it's going to give the Fed some visibility as to what is the most likely and most logical next move. And so we could definitely see some action coming this Thursday as we approach the Republican self-imposed July 4th deadline, as well as the non-farm payrolls coming out. So once we see what happens on the morning of Thursday, I think we could see a lot of the volatility, really time decay, get sucked right out of the options market on that day. So we want to be pretty nimble going into Thursday. Hope that helps. This is Dan Passarelli, Trade Smart.